Good morning, everyone, and welcome to the European crossover webinar. We did see the yen, or actually I should say dollar yen, come off its lows. We'd had an area there. We talked about you could start to come in around 765, and I think that was actually the low. But we were talking about 765 to 736, but you could start to come in at 765, and 765 was the low. I actually didn't even expect it to even get to that until, let's say, maybe today or Monday or whatever, on the retest of the 108 that we talked about. I didn't do anything in Dolly. I'm not doing anything there. I'm just trading crude and SPOOs. But we did see the euro come lower, but then turn around and work back higher. And, I don't really focus on daily charts or weekly charts unless we're coming into a key area. So got to look at this, for this to still be here, up here on the weekly close is going to be of some significance. Something you have to go and keep your eye on, which might keep the pressure on for any bears. So you have to, once again, you have to be kind of cautious with the euro. And we've seen a very nice rebound in the energy complex. And one of the things I pointed out to you yesterday, although it looked like it was, on its last kicks, was the RBOB. And, I tweeted some of this stuff out in my regular feed, but it had to hold that. I said make or break, which was the 3630 area. And then we actually had an inverted hammer, and it was still looking pretty bad. And then all of a sudden at the very end, it rallies. And I pointed out an area that on the crude that we could scalp against on a rally. And they did go and pull back before the pit close into that, or right before that area. And but I was thinking to myself, I go, that RBOB is going to look like it's put in a double bottom. I mean, kind of obvious, but I'm saying is when you think it looks so bad, and then for it to basically raise like a phoenix from the ashes, I go, they may want to just run with this thing. And the night before, the prior night before, when I was recommending for people to exit out above 38, I told you I put on a small short position, and it just didn't go anywhere. It just sat there for the longest of time. 2 hours later, it's still sitting there, a whole bunch of nothing. And then, I put in a limit, and I went to sleep, and I woke up, and finally, I was out. And I thought about that last night because I thought about, shorting the crude against 37.97. And I go, this is an area kind of faded a little bit, and before we had gone to that high, and I thought about it, and it was kind of sitting there. It kept on advancing. I thought, you know what, I'm not going to do that, because I'm not used to trading in Asia. And I know this doggone Asia market will just sit there. And so it's kind of weird, but in a way that actually helped me that night before that, that small short, because I recommended getting out of longs. I thought, you know what, this is such a good area, it's probably a decent short. Now, obviously, if I'd have hung on, it would have done really well. But the point is, I got frustrated because I'm not used to trading crude in Asia. And it sat there for the longest time, didn't do a doggone thing. Well, that was weighed on me last night. I'm thinking, you know what? I don't even want to I thought about shorting it, it's coming up right against 38. And I go, you know what? I don't even want to put this damn thing on. I go, if it keeps on going a little bit higher, and I go, this is going to sit there. And I go, I don't want to be hanging on. And then the back of mine, I did think about it. I go, that RBOB, once again, it's going to look like it's got a double bottom. I go, they may want to just, push it. Now, I didn't think they'd push it this much higher. And I'm talking about the RBOB, but it also took the crude, with it. And so, like I said, in a weird way, the night before, by the Asian market sitting so quietly and not doing anything, I'm talking about the action of the crude. I think we went like over 2 hours with a 20-cent range, kept me from even trying to scalp it short in the Asian session, and really was, turned out to be a good thing, because if I had, And I kind of thought about that. What if you short it and it just keeps on going? Because we're going in towards a Friday, and you already have that double bottom in the RBOB. And then I woke up this morning like, whoa, we really did go in and take them higher. And I got up late because I was up late watching the NBA game, the Spurs and the Warriors. So that's where we stand here on the energy complex. The SPOOs have rallied back, relatively well themselves. They ran out of gas at a key level, the 2049. As I mentioned before, lately my attention is more geared towards crude oil because we have such, wonderful, ranges. I picked them up yesterday. I picked them up different times. I sold them short in the U.S. session, but then, picked them up and then got out of them. And then I got picked them up at 36.87. And then, I thought, well, if they work lower, I don't think I know there's some good support at 73, but there's some really good support at 36.56. If someone had asked me, I said, yeah, I'm still in it. I'm looking to add at 36.56 because that's going to be good. And we just didn't do anything, and then we did rally them, but not to the extent that I thought. And then we started to pull back. I said something's going to happen on the close. I get this stinking feeling something's going to happen. One way or the other, we're going to go in and all of a sudden either they're going to break them and then break them for a good 30 cents, lower, driving them lower, or either they're going to bring them up, although it surely didn't look like they're going to bring them up. And sure enough, they did rally them. But I was like, there's no way I'm going to take, because I thought we should have, at the very least, we should have rallied them up to 37.17, at the very least. And we couldn't even do that. All we could do was get to, I think it was 37.11, and we started backing back down again. I'm like, this does not look good. I'm not going to let even if it's only a slight win, I'm not going to have a slight win and turn into a loser. I've already done that with the euro. You know what I mean? I'm like, and I don't like that. I don't like doing that. Even though some people can have wider ranges and all that, that's just not the way I trade. So I put my stop at 36.92. They got hit. They dipped down to, I think, like 82. And then also they took off, and the rest is history. And then RBOB put its double bottom in, and here we are, up almost close to $2 off of those lows yesterday. So that's where we stand. We'll take a look at reports. I think we don't have anything coming into the U.S. session. Well, we do have Canadian employment, so that'll be key for the CAD. And we have wholesale inventories at 10 a.m. Eastern. And that's it. So Canadian employment at 8:30 Eastern. That'll move that market a bit. Walter says, good morning. Good morning, Walter. We're here at the end of the week. This has been an interesting week. Like I said, the wheels really fell off the caboose in the dollar yen. I was like, wow, amazing. Quite a little bit of volatility. Like I said, I honestly, when I was talking about that 765, I considered coming into the yen at that time, but I just didn't. And I was like, and the crude was acting kind of weird yesterday because I remember, I thought we were going to sell them off, after I got short, and then, they kept dipping low, and we got into that 37.53, which is a pretty good area, and we just couldn't get any bounces. And I don't think I shared it on my regular feed, but I said, they're going to, I don't know if I said they're going to, but I go, the next area that looks like they want to go to is, I think they had said they had supported 37.30, and I said, but I think they'll go to 37.27, and the low is 37.26. We bounced, but then obviously we bounced, but we didn't have any. Obviously it didn't last for too long because, like I said, we worked lower, and I was looking for them potentially to work lower. I even had a limit. But I ended up moving it lower. I had a limit at 37. Yeah, because I had good support around 37.11. I thought, you know what, they're probably going to take them down to 09. And I had a limit at 37.07. And I didn't like the action on the way down because I thought they should have filled me immediately and then bounced up. So I pulled that and then got long on a scalp. I think that was towards 36.95. Anyway, so they rallied them up, not a whole lot. And then my area to get back in after they had really started to work lower was at 3687. I actually I didn't even notice it because I stepped away from the desk and they had already dipped down to, I think it was like 78 or 75, something like that. So actually, I didn't even think it was such a great area when I came in at 3687. But I thought, hey, you know what, they're going to launch them. And they did rattle him, but it wasn't anything to hang your hat on. So we'll go in and move into the charts. And like I said, it's a late start for me, so not any real news to think of. So we're just going to move into the charts at this time. I guess for something different, we'll start here at gold. Um, we've been talking about this. Here's at 1239, and we talked about the significance of this 1245, and look where they run out of gas at 1245. Like I said, I think it's a very good market to trade. I think that goes without saying. But like I told y'all yesterday, I've already said it multiple times, is you have to be willing to hold the position. And I just don't want to do it. But, when they got above 1239, we call this the bias pivot. We can see how many times it's been a key area. Whether once they get above it, they launch, or once they get above it, they lose it. And if they do regain it, like here, you lose it, and then you regain it. And when you regain it, the fireworks go off. You know what I mean? So they got above it, but I would have thought like 45 would have been an area like, okay, if you're kind of day trading it, peel off those longs, not necessarily get short, unless they lose 1239, and you can see they lose 1239 and it starts to accelerate lower. But like I said, if you're willing to hold gold overnight, then you're going to do fine. But like I told you, I don't like to trade in Asia. I mean, sometimes I do, but for the most part, I don't care for it. And Asia is a very important time zone for gold. So it's just like, I'm not going to go in, like I said, sometimes, we've talked about this before, intraday, sometimes you'll see some very nice swings, but for the most part, I'm not interested in holding this thing. The only regret I do have is when we made this move up here, I should have gotten short and hung on, even if it was just a mini contract or something, just to take advantage of the move down here. Mini contract in the sense that I didn't have to worry about it. Just throw it away and just say, wow, look, now I'm up $10, or now I'm up $20. Oh, wow, where do I step in and go and, look to cover or something. So I do have those regrets there, but for the most part, like I said, I've got my hands full enough with the energy complex, and I'm starting to do more stuff, as I mentioned before, in the spruce. So those are the two markets I really like trading them. The euro, it's just hanging up here doing a whole bunch of nothing. And but like I said, to here in the gold market, obviously this 30 now is going to be key. And all we've done has been just hitting these levels up in here. That's it. I mean, we even looked at it on a half-hour chart about 3 days ago. I think it was, and I was saying, if they get above, I think it was here, so let's get on Monday. And I said, they were working higher, and I said, if we get a positive close above 34.50, that opens up the door for 39, which we did run up to 39. And then we were looking on a half-hour chart, and then we faded them pretty good. And here we are, we get up above 39. And this, in a way, is kind of bearish, because if you think about it, look at here from a price structure standpoint. So you get slapped back pretty good at 39. We all know the significance of 39. And so it gets slapped back pretty good. And, you can see here that you get this long-legged doji. And it's just beautiful. If we put a close here, it'd be like a perfect long-legged doji, which generally means when you get this long-legged doji is you've run out of gas to the momentum, whatever the direction of the momentum is. Well, the direction of the momentum was south. Okay, so generally what you do is you see the market come back. Doesn't mean it turns around and starts launching like crazy to the upside, but you see people start giving up their positions, which we did, and we're bumping up against this 39, and we finally get above it. So if you look at this in context, it's like, wow, now we can really start to launch. And same thing here, you kind of get this, it's not as long, but kind of like a long-legged doji. And this is more perfect than this one in the sense that it finishes just almost smack dab in the middle. Once again, meaning that you've lost, the market's losing momentum. In the sense that bears don't have control and bulls don't have control. It finishes in the middle. Well, generally what will happen is you'll see the market then going in, I would not reverse, but come back from whatever the direction has been. Just like here, what was the direction? It was down. So you get this long-legged doji and the market, and you're already seeing here, right here, where the market finishes on its lows. We could possibly move them lower, and we do, but we close. We actually even close even higher than the previous close. So it opens the door for the market to go higher. Well, you come up here, and now the market's gotten tired. Bulls don't have control. Bears don't have control on a very short-term basis, and you lose the momentum. And you see the market starting to get tired. Once it loses 39, we start to accelerate, lower. Well, but I think more importantly, from a price structure standpoint, is you get, like here, they lose 1239, they accelerate lower. So we challenge 1239, but we don't close above it. That's the key thing. You have to have that 2-hour close above 39. So it closes there, and then we work lower, okay? So then we rally all the way back up to 39, just about 39. I think the high is what? 38.80. And then we run out of gas. So we finally break through the ceiling of 1239, and the market runs out of gas at 45, and it's like, okay, now we lose 39 again. To me, that's a very bearish and probably augurs for a direction of even lower prices, because now you lost to 1239, you fight to come back, you almost do it, and you fall right back on your rear end. Then you rally them up again, and then you almost make it there right at 1239, and then you fall right back again. Then you finally get over the hump, and then you just run out of gas, and now you're losing again. To me, that augurs for lower prices. Allison says, hiya, I'm a newish listener here, just saying thanks for helping me make some good pippage. Oh, well, happy to help, Allison. Happy and welcome to the European crossover. Like I said, you're new. Generally, we just cover the majors. I'm talking about in the currency, because you're saying pippage, and then we'll look to a certain extent, not as much as often, gold, and usually on Fridays. And that's good that you're saying you're new, because in a sense, on Fridays we focus a little bit more on teaching. That's why I focus a lot more, like this long-legged doji and the market running out of gas, and you see me talk about price structure. And I'm a little bit different in the way that I look at the market, in the sense that I think it's more important the levels, and then and I'll use Fibonacci to try and point areas where I see a confluence. Like let's say, obviously we know this 45 is key, but let's say that this 45 is, and we hadn't had this run up here, happens to be the 61%, and it's also just right here at this level, so I'll use that as a confluence to help me put the probabilities on my side. Quite often you'll see me coloring these areas, and I call them zones, and you can see where the market either has trouble bumping into the zone, or once it gets into the zone, and quite often we've talked about this, it gets 50% in the zone, it'll pull back. Obviously not much of a pullback, but you can see how the market, starts to launch. It actually ran even beyond the top of the zone, revisits the zone, and once we get past it, then the market really wants to launch up. But like I said, I think that it is kind of bearish from a price structure standpoint, that we fought so hard to make it back to 1239, and then we turn around and we lose it. So, and I think that in light of the weakness that you've seen in gold, not gold, in the dollar, the gold market should have easily been, we talked about this the other day or yesterday, should have easily been a challenge in 1263. So this is very weak in light of the weak, it's very weak, this action, price action, struggling with the 1239, but of course that's, as I mentioned before, the bias pivot. And for Allison, you'll see me when I mark them in red, that's what I call the bias pivot. And all it means is that when it's above that area, and I'll make it that simple, but I'm saying when it's above that area on a 2-hour close, the market, the direction is bullish, or in this case, bearish, okay? So it doesn't mean automatically you buy, it turns everything going in that direction. The market then turns in the direction of they want to buy them. Maybe some are going to buy them on the ask, and some are going to say, no, I'll buy it on the pullback. But that's the direction that the market's going to. You can see on the sell-off, where does it find support? Right here, 1239, the bias pivot. And then we turn around, we launch right back up. But you can see how significant that stays across the board, that 1239, and why a lot of my work are focused on just the levels. But like I said, in light of how weak the dollar's been over the course of the last 10 days or so, for gold to have struggled here at the 1239 and not to be up here at 1263 is rather disheartening, if you want to say it that way, for bulls. And then you finally get above 1239, and then they run out of gas at 45, and here we are, we lose 1239 again. To me, that suggests that we're just going to have to move lower, because you have to look at the other side of the trade. If you're a bull and you're saying, I'm hanging on, I really think this, it's a, for whatever reason, gold is just acting a little bit slow. It just hasn't responded to the dollar. But I'm telling you, the dollar is weaker and gold is going to respond. So then you finally get up past 1239 and you're looking pretty good, and you're like, maybe you tell some other people, I told you gold was going to go higher. I mean, the dollar's weaker. I mean, how could it not go higher? I got the wind at the back of my sails, and all of a sudden you wake up the next morning, you're like, what happened? So if you're a bull, and that's how lots of times I learned that from Blake, you have to look at the other side of the trade. Look at the other person that's on the other side of the trade, even if you're not even bearish at this point. But look how the bears were looking at it, look how the bulls were looking at it. And so the guy's like, this is really bad. I mean, I'm coming into a Friday, and what the heck? We get above 1239, and I'm telling everybody everything looks good. And now we're back down here again. Oh heck no, I'm getting out of this trade. This is ridiculous. And anybody that was bearish said, oh my God, I'm chewing on my nails. I hope they don't close above this on Friday. Well, then they see it run out of gas, and they're like, everything looks okay so far. So that's what I'm saying. When you look at it in that light, then it emboldens the bears, and those that may be bearish here, and the bulls, it's disheartening for them to finally get above 1239. And then we quickly run out of gas and we lose 1239. So anyway, that's my take on the gold market. But like I said, on Fridays we have a tendency to focus a little bit more on the teaching element, on what we're looking at as far as price structure, things like that. We'll take a look at the euro here, and this has been a tricky one. Like I told you, I always pride myself as being a pretty doggone good euro trader. Like I told you, I mean, Allison is new, but we were looking for this big pull, this big breakout, I should say, here in the euro at the time. And the reason I'm saying that, because I was seeing what was happening in the dollar CAD and also what was happening in the dollar yen. And they had actually moved probably about 36 hours before the euro had done anything. So I was looking for this big breakout, and we got that big breakout. And I thought we went too far too fast. And up here I was saying, this is it. No way. The market it's too far too fast. I remember telling Blake, I go, this is a death knell. Although, as I said before, I only expected about 200, maybe 250 pips lower. And we actually fell as much as 500 pips. But the thing is when you look at things in context, look how much work has been done in this area. And we talked about this before. For Allison, she's new. From a price structure standpoint, look at this. This is since December, okay? And look at all the work that had been done. That was my point why we could move even higher as we broke out. Now, when we came back, notice how it never took out that area. And actually on this day, I was looking for potentially the market to drag as low as 783, and I thought it was going to be a fantastic area to get long. And we only took out the low by, I think it was 2 pips, and then we turned around and we launched them. So technically the market has done so much work. Now when the market got up here and we're pulled back, some people were saying, you know, hey, it looks like the market's going to run out of gas once it turns around immediately. I was like, that's not going to happen. Because we've done so much work down here, the market's not going to fall apart. And I was hoping that it could dip a little bit low for a very nice area to go and buy, but it didn't. Now, that being said, I thought we really got overdone up here. And I got short on the way up, and I had to hang on, and ultimately I came out okay. But then I got short again up here. We made this run, and as we came lower, you know, I'm scalping it out. So that was helping me as far as my trading. But then I thought, okay, this is it. Now it's finally going to fall. I'll be doggone if that thing doesn't come down here. And I was really pretty upset. It was this move here because I thought we were going to make it at least at 1329. That was my target. And I even had a limit at 1327. The low was 1327, so I wouldn't have got filled. I would have had to hurry up and jump back in. But then I let this thing come back up. And as we worked up higher, I said, look, if we get above this bias pivot, and here goes my, for Allison is new, there goes my bias pivot again. I said, if we close above 1365 on a 2-hour close, that's it. I got to get out. And sure enough, we did, which was really unfortunate because, like I said, yeah, I only took a minor loss, but more importantly than that, it told me, hey, look, that's 2 back-to-back trades. And it's not really the trades themselves because I came out okay on the first set of trades, but that's 2 back-to-back times I'm just not reading the market correctly. It looks like it wants to do even further. And I'm pretty good about reading the euro. And I said, you know what, that's it. I had enough of this. Well, yesterday morning, they were already fading them in here. And to be honest with you, it looked like it would be a pretty good short. And it was. I mean, it made a pretty good run down here. But honestly, I didn't want no part of it. I had my hands busy with the crude oil. And I'm looking at S&Ps. I was like, you know what, no. I mean, it did come into this area that we talked about, which is this 1455. And we'll back this up for Allison. 1455 is major, and I'll show you why. We talked about this. Look at the touches here at 1455. You see what I'm saying? You got a real nice battle zone here. Look at the first run up here. We come to 1455. Now we run out of gas before 1455. We come, you know, like I think this is like about 1418, 1420, whatever. And you see a pretty good pullback. You can see that of 600 pips. And then we come back up to test 1455, and we have a little battle there. You can see if we open this up a little bit more, you can see there was a real battle there initially at 1455. Finally, we get above it, and then we launch. We really take off. This was the Chinese debacle in August. We come back, and we do, and look where we find support at 1455, and we rally them up. About 100 let's say about 100 pips. We come back when we lose 1455, the market accelerates lower to about 1375. Then we come back, we regain 1455, the market launches up again, and then on the way back down, as we lose 1455, the wheels fall off the caboose, and we move, you know what, 400 pips lower. So we make another run up here at 1455. We run out of gas at 1455, and we lose 300 pips. So you can see the significance, and that's why I was looking at this. And they did pull back. But at this point, like I said, I just don't want to do anything with the euro. It just, one of the things that's bothering me is the same example that I pointed out over here. This whole area is bothering me. That it's taken so much time in here. I would have expected this, something like along the lines of this. Well, I talked about the 1282, but even before we got there, maybe like this, maybe like this. We can move higher. The idea that we're still sitting here so long is kind of scary because it tells me that to a lesser extent, but remember this area we just talked about. This is almost a microcosm to a certain extent of this area, remember? And look how it turned around and launched. So it bothers me because one of the things that's good about trading euro, you get a lot of good two-way action, back and forth, back and forth. The idea that it's hung around up here so long is a little bit scary because if it gets past this 1455, you better get the heck out of the way. The next stop is going to be 1492, which isn't that much higher. But it definitely opens up the door for my ultimate target, which would be 1713. And maybe we'll eventually break them and they'll have to work a little bit lower to find some support. But I'll tell you what, they have all the technical backing from back here. There's nothing to stop this market. You see what I'm saying? It has all that good technical area here that this market can go higher. And I don't play that kind of game. I don't play that kind of game. Or I'm just going to say, well, I'll put a stop above 1475, or I'll wait to see what it does at 1492. I mean, we're only 25 pips away, basically, from 114 again. And we're on a Friday. I mean, you'd have to give it to the bulls. I mean, give it to the bulls in the sense that they'll probably work them higher. Oh, we're already well past our break, so we're going to go in and take a break. But we kind of focused a little bit on that, so that's okay. So we'll take a break and we'll come back. And thanks for joining us here on the crossover. Okay, everybody, welcome back to the crossover. And let's go in and what we can do is let's go in and take a look at the crude oil market. Okay, well, as I mentioned yesterday, we had gone and come back. We were much lower here in the crude oil market, and I mentioned this, earlier we were talking about this as 36.73. We'll focus on what really got us here. We saw this pullback, and I thought to myself, and I mentioned the 36.93 also. I thought this 36.73, which actually happened to be right here in the 50% pullback here of this move here in the crude oil market, thought the market would ultimately hold up pretty well. And someone had asked me, and I actually had got long at 36.87, which I didn't think was even that great of an area by the time I came in, but I thought that we would, had an opportunity to really launch them up. And when someone had asked me, hey, are you still long? I said, yes. And, I'm looking to go on and add if it pulls down here to 36.56. If it pulls down to 36.56, I thought that was a pretty solid area. You see that here. Actually, I'll go in and highlight it. Quite often I'll go and put this in the dashes just to highlight the significance of it. This is why I thought the 36.56 was going to be very key here on a very short-term basis. You can see here where we have a lot of action coming in here at this level. A lot of, basically I like to call it battle zone. And we get back above it, and the market runs out of gas, and where does it find they're once again battling it out here at 36.56. Once we lose 36.56, then the market accelerates much lower. And then you can see as we come back up here, and as Alice had mentioned, she's new. one of the reasons that's why I stress so much on, on the levels themselves, because I think the market reacts more to the levels as opposed to oscillators like RSI or stochastics. So you can see here, we run into a little bit of a battle here. Doesn't mean it can't get past 36.56, but you can see that people are willing to take the other side of the trade here at 36.56. Even though it gets past it, you can see the market keep trying to push it lower. At some point, the bears say, man, it's just not breaking lower, and then we turn around, we launch back up. And where does the market, on the pullback from above $37, where does the market find support at? 36.56. So you can see the significance of 36.56 and why that on the way down, when I had added, I certainly didn't want it to work lower, and I actually thought that we would rebound, have a very nice rebound, but a nice rebound before it just kept hanging on all the way to the close. We did get a rebound, but by that time, I'd already exited out for a very small profit. As I thought that, you see here's the rebound that we saw here, which was this 37.09 here, right in here, this area. Actually, I think it was right in here. Well, so we got up here, because we did make one more dip. Here's that low I was talking about. I think it's made it all the way down to 36.82. We got up here, I think we only made up to 37.11. And I mean, if we'd have made up to at least 37.17, I probably would have, at that time, would have clipped off most of the position. But the fact that we only made it here to 37.11, I'm thinking this doesn't even look good, because the prior key high you see was 37.09. So we took it out by 2 cents, and we come back lower, and I'm like, at this time, RBOB was really looking pretty bad. So I'm like, no way, forget it. I'm not going to let, because I thought they could accelerate it. Either I thought they should have accelerated them beforehand. If not, they could open the door for them to really, the wheels to really fall off the caboose. And I was thinking, no, I'm not going to be part of that. I'm not going to have a winner turn into a loser. Basically what I was going by is also what had happened to me in the euro on that last trade, and I just had 39, not 39. I had 13.29 hell bent in my mind, and we only make it to what? I think it was 13.38, I think it was. Might have been just a hair lower. And it was disappointing to see that, give up those gains. It comes right back up. So I was like, oh, heck no, this is not even going to happen. I'm just going to just exit, and that's it. Hey, sometimes that's what happens. But the thing is now you see this huge move, you're thinking, oh, my God, what the heck? We really took off. Well, and this is one of the things that had concerned me is, it looked pretty bad for the RBOB. I mean, after we had this beautiful hammer bottom, which I was already looking for, not necessarily looking for at that time, but I had, on the Insight call, I had tweeted this out before the report that we were looking at, and then we talked about this yesterday, the RBOB, we found a level, which was 35.81, and lo and behold, actually 35.81 or 82 was actually the low. Okay, and I was looking at 35.81. I posted that out, and we saw this beautiful rebound. And then it turns around and gives it all back. But the thing that was really worrisome is that I tweeted this out on my regular feed. I said 36.30 is the make or break area, and it was already starting to slide past it. And here we are going to the close, and it still looking weak. I'm thinking, man, this does not look good. And why I thought that maybe, potentially crude could even work lower. But I did tweet out this inverted hammer, and I'm thinking, well, at least it's still holding here, but still it doesn't look good. And crude already started going pull back. And I thought that, someone had asked me, what's your profit target? And I said, my profit target is 37.28, 37.31. And I'm talking about the crude is the 38% of the recent move. And sure enough, on the close, when they rally them up, they run out of gas at 38, I think it's 38.34. And then they quickly pull back, and they're just sitting there at 38.28. So my targets were on, but anyway, one of the things that it concerned me about was as the RBOB started to come back up, I was thinking to myself, I go, you know what, the market's going to look at this as a double bottom, because we came back and tested, and the thought that it looked so bad, and I would say for so long, because it wouldn't get a bounce, and for it to come back and go, I don't know about this thing. I go, this thing may really want to try and move. And it was moving in the Asian session. I don't think we even quite made it to 40.46. But I thought to myself, hey, I remember how this doggone thing acted in Asia the night before. And this is where I got short. And look at this. This doggone thing sits in there for 2 hours doing a whole bunch of nothing. And so at the time, I tweeted out, because this is what we got. We did really well on the report. And I said, hey, it's, time to get out of your longs. 38.01 is a 38% of the overall big move. 38.09 is the 61% of the recent move, blah, blah, blah. So I'm thinking, well, it's a pretty good area. Why don't I just go and take a small short? And, I sit in this thing like forever and a day. And then finally I went to sleep and I just put a small limit. I mean, not small limit, but I'm saying is I wasn't even looking to even get much. I was thinking, well, golly, I think this thing ought to be lower. I thought it should quickly pull back to about 37.80-ish. And it's just not doing a whole lot of anything. I go, I'm not going to hang on. This is ridiculous. It's already paid. I know they'll have to at least test at $38. Let them go sub 38. I'm just going to go and get out there. And so when I wake up the next morning, they're already trading in the 80s, and then we just keep on working lower, 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 lower. Well, when I thought about shorting it, and I thought about this, I go, remember this area, before we got up to the 38, we had some trouble here at 37.97. So I was thinking the same thing here in Asia here at that. You know what? And I guess we did go in and pull back. So I guess we've been fair. Not really at all. But I said to myself, you could get short, but you know what? The way this thing stuck around, there's just no offers. Just like yesterday, forget it. And I'm glad I didn't, because then when I wake up this morning, this thing had turnaround launch. And I got up late because, like I said, I was watching the NBA game, the Spurs and the Warriors. So, like I said, here we are. We're pulling back a little bit. But like I said, this move was predicated on the awesome job of our Bob. Now, we even got the Brent trading up in here. But like I said, that's how we got up here. And I think probably some people may have got the rear end run over. Good, but good on this trade. But they got that meeting in Doha, and they're talking about cutting production. You know that's not going to happen. But the market's going to just let them have their way, and nobody wants to get in the way up to that point. So they can let them run. But the whole thing was predicated on this beautiful turnaround here in our Bob, and we had this inverted hammer, and so here at this low, and it still looked like thinking, okay, well now they can get a little bit of juice to go the upside, and I'll be doggone at this thing. And what made it interesting, it took out the low by just a few ticks. You see that right here? Took out the prior low, and so when it starts to turn around, then you really saw some dramatic short covering, and that opened the door for much higher prices. So that's what we have here in the crude oil market. So we can go and take a look here at the SPUs. So we've had some nice action here in the SPUs market. Someone had asked yesterday, what were the support levels for the SPUs when we were on the way down, and I just shared with him what were the levels I had on the 2H. At the time, we were trading right at 30, maybe just a half a handle below that. And then I put in 26.75 and 22.50 right there. And then we ran out of gas. Well, I think we finally stopped, was like 26 3/4 or something like that. Anyway, pretty decent, or 25.75. I'm just going to move this over here. And we've had a pretty nice rebound from there. And actually, that's why, like I said, Allison had mentioned she's new to the European crossover webinar. The time frames that I look at are a 2H, a 30-minute, and a 15-minute. I mean, a 2H, a 30-minute, a 5-minute. I do look at a 15-minute on the SPUs because I think it's as opposed to 30 minutes is going to take too long. I don't look at the 4 hours because as a day trader scalper, I can't wait for a 4-hour bar to go in and say, okay, we're going to go here, go there. Because I do a lot of work based on how the market closes on the actual bar to see, are we above a key level? Do we lose that level? Here's the 5750. So on the 2H, you can see they're struggling, but they're holding the 5750. Once it closes below the 5750, and that's key here, it really opens the door for an extended move long, which we did. But I'm saying is I like to look at the closes and how we match up into these key levels. This 46.75 is looking pretty key here. We'll go in and accentuate that a bit. The spoons trade it beautifully from a technical standpoint. And when I say you know, when it's working like that, you can see here we get up to 62.50, and I tweeted this out. This was after the Yellen, or right before the Yellen thing. I said, I don't know what the screws are going to go and do, but I'll tell you what, they're going to run into trouble at 62.50. It didn't even look like it'd make it there. And then we came into the European session after the fact, and where did we run out of gas? Right before 62.50. The high was actually, I believe, was 62 was the high. And then we go on and work lower. But it's a beautiful market. I mean, from a technical perspective, I don't even follow stocks. I don't even look at what the Dow's doing, what Apple's doing. I just go by whatever the technicals are happening here on the SPOOs. So you can see here that they ran out of gas at this key area, 49, right in here. And that's what I'm saying is I look at a 2-hour and then a 30-minute, although in the SPOOs, I think the 30 minutes is too long too. I can't wait around for 30 minutes. So I use the 15 minutes so I can see the levels. You can see, you don't see the 49 on the 2-hour, but then you can clearly see how important this 49 is here on the 15-minute. And then this is where, after a pretty good run, if you think about it, from the lows here, you're looking at almost 23 handles. So it would make sense that they would start to run out of gas. And then sometimes you can go in and see if you can get a confluence. I don't think it was as important, but you can get a confluence with the fib. So you come over here. It's probably like maybe 61% or something. Let me take a look. Yeah, it's 61%. So 48.25. So you kind of have, you try and look for a confluence. You've got the 61% confluencing with this level, the 49, and so that if you think the market's come so far, you're thinking, you know, it should go on and run out of gas. And so you can see that we have a pretty nice pullback from that area, about 5 handles, nothing to sneeze at. And as we work back up here, we're still struggling a little bit. And I think this 49 is pretty key. We remove this. And you look at it in the overall context of the move, you can see how important 49's been. And once again, this goes back or reinforces what I'm talking about. It's all about the levels. It's not about oscillators, overbought, oversold. I mean, if you looked at this on a 5-minute, you say this is really overbought. I mean, my stochastic's really caught. Your stochastic didn't call crap. This has to do with the levels. Look at this, 49. Bounce them off right here. Come back, 49 support. Bounce them off again. We lose, you see a battle here, 49. We lose it right here. Have a pretty good, decent pullback of 8 handles. We rally back to 49. We can't get above it. And then we sell them off pretty good to the extent of about 14 handles. Then we turn around and rally. Look at that. We have a battle before 49. Once we get above it, the market launches and we can make a move higher because we've taken out that key area. Kind of like we talked about with gold at 12.39, but unfortunately for gold, it ran out of gas quickly at 12.45. So we rally up here and we rally all the way up to 2071.5. And where does the market find support? Where does it find support? Support again? It finds support 22 handles lower, right here at 49. We rally them up here to 52.50. We pull back to 49, we rally back to 52.50, and as we lose 49, we accelerate on the downside. And then on the way back up, 49. And you can see how it's trading on the levels. has nothing to do with monkey patterns, i.e. harmonics or oscillators or whatever. You trade the way you want. I'm just telling you, like Blake says, I'm not here to tell you how to trade or what's the wrong way or the right way. I'm just telling you what works for me. And the same thing here. Well, this is what works for me. Just the levels and the fibs, primarily the levels, and then I look at zones when the market trades within a zone. And you can see as it loses the zone of here, 34 and a quarter, 52, 62.50, we accelerate lower. And we try and come back in the zone. We lose the zone again. We fall apart. Once we get back into the zone, you can see we test it. We hold the zone. The market opens for a launch higher. Basically, the market moves like a symphony. I think Blake's over here.